Does volatility affect the argument that Bitcoin is a great store of value?
I don't really look at the price. I look more at the hash rate. And the hash rate over the past 10 years has been in a very predictable, solid bull market. And it just reached new all-time highs recently.
Mhm.
And that's really the nexus of the Bitcoin protocol. Price is not really, it's the least important data point on Bitcoin. The important data points are hash rate, halvings, difficulty adjustment, the emission schedule every 10 minutes. Those are important data points. Price is only reflects on the dollar, because when you're pricing Bitcoin in dollars, you're making a comment on the dollar, not Bitcoin. One Bitcoin equals one Bitcoin. That's never changed. But if you price it in dollars and you say, oh, it's a reflection on the volatility of the US dollar, because unlike fiat money or gold, Bitcoin is free to trade. So it's trading and it's showing volatility in the dollars. So Bitcoin price down, we see dollar strength. Bitcoin price up, we see dollar weakness. Over the past 10 years, the US dollar is in a hyperinflationary collapse against Bitcoin, punctuated by the occasional strength in the dollar. So whenever the dollar might go up on any given day, and so priced in Bitcoin, you see the price down. But that's just a reflection of the dollar. It has nothing to do with Bitcoin. The Bitcoin's path is toward global Bitcoin adoption, hyper Bitcoinization. Market cap will be at 10 trillion, 20 trillion, 30 trillion. And that path is set. It's not going to, there's nothing that can derail it. And any given dollar price on any given day is not really important. Bitcoin is on a vector that it's on its own. It's a new asset class. It was the discovery of a new asset class back in the 2009 when it was first kind of dropped on the web. And the correlation or reverse correlation of the dollar, I think, is the only thing really that is interesting, because the US dollar is a world reserve currency and Bitcoin is competing to become world reserve currency. So the king right now is the US dollar, and Bitcoin's attacking the king. So that's where those two come together. And sometimes that's the end result is Bitcoin replaces the dollar and replaces fiat money and replaces central banks. So that's where it's going. And but it is on something that's compounding at a rate of 200% a year for 10 years. It's not correlated to anything.
Right.
It's like it's a vertical rocket going straight up, and it's going to pass some clouds on the way. Then it'll pass a mountaintop. It'll pass a star. It'll escape the galaxy. It doesn't mean it's correlated to any of those things. It's on its own vector. It's heading on a vector out of any, as Michael Saylor would say, all your models are broken, right? There are no models suitable to evaluate Bitcoin.
I think it's absolutely true. You said that, Bitcoin is attacking the king, being the United States dollar, but we all know that it's not the only one attacking the king. And you touched on central banks. We have central bank digital currencies being developed worldwide, especially in China, who has unabashedly said, listen, we want the dollar not to be the reserve currency, and our probably best shot at that is a digital yuan. So how do you think that those play into this sort of 3D chess now instead of 2D chess of Bitcoin versus the dollar?
Right. Well, the central bank digital currencies are just fiat money, centralized fiat money. So they don't compete with Bitcoin. They compete with other fiat money, centralized fiat money. And what will happen is that one major country will say, you know what, we're just going to add Bitcoin to our reserves. The same way MicroStrategy added Bitcoin to their balance sheet, one of the major countries, central banks of the world, will say, we're going to start adding Bitcoin. And then it'll make all these central bank digital currencies look even worse than they already look. It'll make fiat money look worse than it already looks. And it'll make gold look worse than it already looks. So there's no threat from central bank digital currency, because it's just centralized fiat money. It's not different than currently what we have now. We have US dollar is mostly electronic, right? There's very little actual paper floating around. It's a central bank digital currency. I invented a digital currency back in 1996 that I got a US patent on, 5950176. And it's a virtual currency, and it's a virtual trading system, and it's also virtual securities, and it was the first patented commercial prediction market. So, I mean, I know this whole industry very, very well. And I can tell you that a central bank digital currency is nothing, has no problems, no threat to Bitcoin.
It's worse. I mean, it's a central bank's wet dream, right? It's complete and utter control of the money supply. So, I mean, if anything, it should drive more people towards Bitcoin, I would believe.
Well, it's going to be easier to do, let's say, MMT, modern monetary theory, or UBI, right? So in the States, you already have basically UBI. People are getting a monthly check from the government, and they're not going to apply for jobs because they're getting twice the minimum wage by not working. So that's UBI. So we're already on UBI. So, okay, so now we know what happens when you do UBI. Oh, you get inflation. And so in other words, for every dollar increase you get in your UBI, you're going to have to pay more than $1 for that basket of goods at the grocery store. So now you're losing again. You're going to lose and lose and lose. You cannot print your way into having a prosperity. I mean, if that were so, then Zimbabwe would be the richest country in the world, or Venezuela would be incredibly rich. But they're not. They're incredibly poor because they think they can print money to create wealth. It doesn't work that way. Sorry.
That makes sense. So let's assume that this hyperinflationary environment does come to pass in the next year or two. What can we do as, people with a microphone in this market to make sure that as many people get and buy Bitcoin as possible before that happens?
Right. Well, the sad news is that a lot of people simply won't buy it. And, like the story of Noah and the Ark, they're going to drown. But, here's the thing, Scott, when you're in an airplane and there's a sudden problem, they always tell you when the air mask drops, put it on your own face first. And then if you have kids or whatever, try to help your kids. So when this thing collapses, you have to make sure that you, Scott, and me, Max, have enough Bitcoin. And then we may be in a position to help people without Bitcoin. But we're never going to be able to convince people without Bitcoin who don't want to be convinced to get Bitcoin before the problem. And so we shouldn't really worry about them. We should just worry about getting Bitcoin ourselves and getting as much Bitcoin as we possibly can. And then when it hits the fan, then you're in a position to help somebody. But if somebody doesn't want help, there's nothing you can do. It would be a waste of time in Bitcoin to get somebody to try to come to Bitcoin if they're not ready for it, and they never will be ready for it before the dollar goes into a huge collapse. So just keep stacking sats, and then when the thing blows up, you'll be in a position to help somebody.